Good morning, everyone, and happy Friday. It is the 9th of December, 2016. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Thanks for joining me again on this daily pre-market adventure that we go through here to prepare for the session. Hopefully, over the years that you've listened to this, we've done this every day for about 3 years now. Um, Hopefully, over the years, as you're listening to me, some of the stuff that I go over has percolated in either through practice or osmosis, one of those, and has translated itself into good habits in your trading. And that's really the point of this broadcast. It's not really to give you entries and exits, it's to help you get in a daily routine that's similar to what professionals do in the morning. Of course, we're limited by the amount of time we have to do the broadcast here. We want to keep it to 10 to 15 minutes, and so it's very abbreviated. Just being here every day is just a consistent way to start and get you off, hopefully on the right path. Anyway, news overnight: inflation pressure in China. The consumer prices jumped 2.3% year over year versus 0.1% in October. Big jump there. So that's likely to get some sort of action from the PBOC. Other than that, not seeing anything major um, reported overnight. Some numbers out of Germany and looking ahead at what we have for today. Today we get the University of Michigan confidence prelim. This is a mover, more likely than not. This is a market mover. Expected at 10 o'clock Eastern. This is for December, 94.5, expected 94.5, higher than the 93.8 prior. And then we get U.S. wholesale inventories month on month final for October, expected at negative 0.4%. And then we get the Baker Hughes rig count at 1 Eastern. Not sure if that does anything for us. As far as speakers, we don't really have any speakers. We've had several ECB speakers this morning, already come and gone. ECB speaker Smets, not Ilmars, and we get Smets again at 11 Eastern. Smets again at 11 Eastern in Brussels. That's the ECB. Other than that, it's a clear calendar. Expecting today to be kind of sluggish. We're still pushing all-time highs. Yesterday, put in an all-time high in the March contract at 2247, which reminds me that we are quoting March, March 2017. It's the H7 or H17 contract. So I'm not quoting December. The charts are not going to be December. I've fully rolled yesterday. Yesterday was a transition day, always a pain in the butt. But everything we're going to talk about today involves March prices, including yesterday. Let's switch gears and look at what we expected yesterday versus what we got. Yesterday, the market looked like it was opening on the edge of this big trend day that we had on Wednesday, 2235 at the time of the trader bite. The primary expectation is for the market to pop out and complete the auction to the upside. The expectation was a push towards 2245, and then I was looking for the market to then remember the market. How can I predict that it's likely to pop through and then fall back in range? Remember, the point of price discovery is to find balance, is to find the opposite side. We cannot find balance without finding the opposite side. So we're going to continue the normal auction pattern, and this goes for housing, for the price of your car, um, anything you buy on eBay, although that's a one-way auction. Those are one-way auctions. The price is going to continue higher until it's met with the opposite force. And so the expectation is we continue higher. Eventually, we will find the seller. In this case, because we're going higher, we will find the seller, and at that point, the first reaction when we find a seller is a rotation down, because as soon as we find sellers, we have people who have bought near the top. Those are the weakest hands, and they're likely to become sellers as they get flushed out. So that's the primary hypothesis: a push up above, a fall back into range. Secondary hypothesis for yesterday is the um, the market drops as it looks for buyers to continue higher. Again, still looking for the theme being a push higher. The market drops lower towards the overnight low there. I underlined it at 2227.75. Rotate back up and um, push through the all-time high again. And this is what we actually got. So we got hypo 1, and we got hypo 1 early. So today, this day was divided up. We got hypo 1 up to this point. We got hypo 1 up to this point, right? And then from there on out, we did not dip into the 2227.75 before we started to push out for hypo 2, which was on this end of the day. We played both sides. It was an interesting push. The hypo 1 played out almost perfectly. Open auction, push out, and then look for rotation back down into range, and then look for sideways trade. Again, here's what we expected on hypo 1 right here. Let me clear the screen for you here. Here's what we expected: open auction, push out, find sellers, fall back in, go sideways. And that's basically what happened on in the first section of the day. The second section of the day, it ended up pushing much higher. And the things to take away from this are several. One, it was a normal variation day. We only broke the IB high, so there's a bias to the upside still, where there's strength. We did not have a neutral day or anything. Um, so there's no appetite yet by sellers to step in. So we're likely to keep pushing to the higher end of the range. And guess what it's doing? It's doing just that. It's pushing the overnight high at 2245. Trading 22.45 against the overnight high of 22.45 quarter. I do have a measured move target at 22.47. This is a key double measured move target. We got within 4 ticks of it yesterday. And that was really my hypo 1 target before the rotation down. Hypo 1 was supposed to look like a push up here, fall, and then finish down here. And it did not quite work out that way, and it's not expected to. The market will do what it needs to do. But what we take out of yesterday is the point of control is above the prior day's point of control. So we're moving value higher, higher low, higher high. So we are still one time framing up with pretty good strength as price makes higher lows and higher highs. So is value. It's much more interesting when price makes a lower high and a lower low, with value holding or increasing. It provides an opportunity for reversal long, and the opposite for an opportunity for a reversal short. But overall, value low yesterday was right at the prior day's high. We finished above the prior day's high, and most of the trade, most of the action, 70% of the volume occurred above the prior day's range. This is showing continued strength, and the expectation as we continue higher. Again, tag that 2247 measured move and potentially the 2250 strike. And this reminds me actually that in a week from now we have quad witching Friday, so there's going to be the the rollover play, which has already begun. But there's going to be a lot more of that. We're going to see a lot more volume, a thicker market, and so on, and it'll start playing for strikes. A lot of people are going to be wrong in this expiration cycle. So it's it's um, it's expected to bring us next week into a pretty interesting Thursday probably. So Um, yes, yesterday's opening type is an open auction in range right here, sideways, and then we got the blast off. So we had an open auction in range, and then we broke to the high side. The question was, would you define yesterday's opening type as an open auction? It was an open auction. Um, anyway, so that's what happened yesterday. So looking at the overnight, whatever happened to my overnight chart here somewhere, hiding behind here, sneaky little chart. There we go. Overnight, very bulky profile, not much. We have basically a very clear box profile. Notice the volume is very, very low. This is attributed to rollover. The volume's still in the December contract, but it should have transferred over. A lot more should have transferred over to this contract by now. Just a complete box there on the profile, holding on to the upper end of yesterday's range and now pushing against that high. So I'm expecting 2247 this morning with a high probability. Once we get to 2247, I'm going to look for opportunities to lean against to lean against size for a quick short scalp. But overall, my bias is to the long side as it's been for a little bit of time now. Um, Again, a lot of this, the delta, our periodic volume, as you can see down here, the volume and everything is going to be off um, because of the rollover from the December to the March contract. So it's tricky this coming week. Just remember, if you're using delta, which is right here, delta simply measures how many contracts traded at the offer and how many contracts traded at the bid. Contracts traded at the offer are considered aggressive buyers because they're crossing the market to actually lift the offer. And contracts trading at the bid are aggressive sellers because they're crossing the market to trade at the bid to sell. So they are motivated sellers and buyers, and the volume delta simply measures the difference between them. This second pane here is filtering out anything that is 99 contract that's less than 99 contracts. This is a kind of a very rough proxy for um, size, which way the delta is going as far as the big players is concerned. That's what we're looking at. As far as what we're expecting for today, I need to get off, let you guys go on about your day here. This morning, I'm expecting an immediate test higher, same thing as yesterday, a push higher, a fall back in, and then for it to drift. This is likely to continue. This will be the primary hypothesis. I am expecting a two-way auction. It is very close to the high. We're opening almost the exact same configuration um, as we did before, as we did yesterday. So I'm looking for it to pop through. As we pop through, we're expecting to see responsive selling coming in. And remember, we're going into a weekend on a pretty big rally week. Um, and so that's what we're expecting to balance that into today's session, the end of today's session. So look out for positions you're holding into the close today. I would not fight the closing range today going into this weekend. And so overall, between about 3:30 Eastern and 4 o'clock, you're likely to see some rebalancing and you will likely see some movement that is quite sustainable as people cover and protect themselves going into the weekend. So be careful fading the closing move today. If you're having a bad day, it's better to cut out early and just suck it up and just kind of book that loss and move on and come back next week and nibble away at it than to try to fight it all the way through. That's I've seen it happen with my prop guys. I've done it myself where I just continue to fight through Friday afternoon after a big rally day, and it just gets worse and worse. So be cautious there. As far as the secondary hypothesis, same thing as yesterday. We have the same configuration, same context. Look for a push down in towards 2240. Look for a base and look for it to come back out and continue higher. That would be hypo 2. The surprise would be a push higher and a rotation down. That's hypo 3. So hypo 3, the unlikely scenario is to push high enough to find those sellers to step in coming into Friday and to rotate back down and to actually come up with a neutral day would be ideal in this situation where we test higher, we finish below the prior day's low on a neutral day. That kicks off the move all the way back down uh, the flagpole on this prior sell day, and it brings us all the way back down to 2208, 2209 area if that happens on hypo 3. Okay. A friendly reminder that on Thursday, I'm doing a webinar on order flow scalping. And it's not really about scalping alone, it's about using order flow to initiate a position with an edge. Uh, just using market depth and so on to try to position yourself, to do your best to position yourself against some backing. It's not Nothing's guaranteed in trading, but that's what the webinar is going to be about. The invitation for that is a part of the description to this YouTube video. It's under the first heading called invitation. It's also on my Twitter feed. Also on your way out on Friday, I would appreciate a thumbs up Friday. Just hit the thumbs up on this video on your way out. It helps promote the video and get me the bandwidth and so on that we need to continue having a quality broadcast. Anyway, I'll catch you next week, and just trade safe. It is Friday. Don't burn a hole in your pocket today. It's not a good day to do so. Ruins your weekend. Be conservative. Good luck.